American consumers continue to part with all that money they saved up during the height of the pandemic, giving the world's largest economy a welcome boost. Retail sales rose 1.7% in October. That's higher than analyst projections and marks the third consecutive month of growth. Spending rose due to early holiday shopping and higher fuel prices. A global chip shortage also made brand new cars more expensive, bumping up the total. It's a good sign for US retail giants, which are already seeing record revenues. Walmart says a sales jumped to better than expected 4% or more than $140 billion in the 3 months to September. And hardware goods chain Home Depot reported a 10% surge in revenue in the same period to almost $37 billion. That result also beat market forecast. Mark Cohen is the Director of Retail Studies at the Columbia Business School. He joins us now from New York. Mark, thank you very much for being with us. So this is the third month of growth for US retail sales, and it comes despite rising inflation. Can we expect the momentum to continue?
I think it's going to be an epic holiday quarter. Customers have been cooped up at home for a year and a half, and I think for most of the United States, they're going to come out in force. Whether they shop online or in person, I think it's going to be an incredible outburst of activity in spite of the labor shortages that will occur, in spite of the service and supply disruption, which will cause inventory to be available in an inconsistent way, and in spite of the emerging inflation that we're starting to see, which we haven't seen in quite a few years.
Right, so we saw positive results from the likes of Walmart and Home Depot. Do bigger retailers have an advantage over smaller retailers in an environment of rising prices, but also supply chain disruptions?
Well, the larger retailers have far more scale to work with. They've been able to pre-plan this holiday more effectively than smaller or medium-sized retailers. They've been building their inventories ahead of the season far more aggressively than they would have during a normal ramp up to a holiday. And so I think they will have an epic holiday quarter, but I think everybody will. It's going to be an eye-opener. And then, of course, we'll have to wait until the holiday passes to see what kind of damage has occurred on the expense side. And we'll have to see where profitability falls. The shortage of inventory is going to result in prices being a little higher than they would otherwise be, which is to say discounting will not be as aggressive. But then all the goods that are going to arrive late that will be past their sell-by date will have to be very deeply discounted in the first quarter of next year to make way for 2022 inventories. So this is going to be a very, very wild ride, up, down, and sideways. At the end of the day, let's hope that COVID, which will rise inevitably during this quarter, will be manageable.
Mark Cohen, thank you very much for being with us today. And now to other top stories from around the world. Germany's energy regulator has temporarily halted the certification process for Russia's Nord Stream 2 pipeline. The decision is the latest setback to the project, which has faced opposition over worries it will make Europe too dependent on Russian gas. Benchmark European gas prices surged as much as 12% following the announcement. Afghanistan's central bank is selling $10 million through an auction to foreign exchange dealers and lenders. The move aims to support the local currency, which has stumbled to record lows in recent days. The economy has been spiraling since the abrupt withdrawal of foreign support following the Taliban's takeover in August. And Britain's unemployment rate continued to fall in the third quarter, despite the expiry of the government's furlough scheme. Joblessness fell to 4.3% in the 3 months to September, from 4.5% in the previous quarter. Separate data shows the number of payroll employees rose by 160,000 last month. And that's all from business for now.